And then one last question, and this is something that we get a lot as well. People will call in and say, "Oh, I'm working, or I'm currently in an installment agreement, but I am going to owe for 2024 once I file by the extension deadline." What does that mean? Do I have to set up a new installment agreement? Is it going to break the installment agreement? So I think a good thing to cover would be the terms of the installment agreement and what can cause you to um, to break the installment agreement and what the consequences of that would be.
So the installment agreement is for the tax that's due. If the next year you owe more tax, then a new installment agreement would need to be in place. Now, if, let's say, at the end of the year when you file taxes in April, you owe 10,000, but then you can pay that 10,000 right away, the prior installment agreement is still good. As long as the current year taxes are paid up, what's already been in place for the past is still in effect.
Perfect. And then last question. So if someone, let's say, calls in, they're currently being garnished by the IRS, but they're looking to set up an installment agreement because the garnishment is too high, what would that process look like?
Well, we would need to make sure that all tax returns are filed. And so that is the very first step. From there, we can get into the installment agreement. The garnishment, the IRS can try to collect on a given year without an installment agreement in place. But the installment agreement, of course, like I mentioned earlier, it looks at your income and assets and what you can afford. The garnishment is just basically grabbing money based on the amount due, not necessarily based on what you can afford.
Yes, and as soon as installment agreement is in place, we can remove all levy that IRS filed, including wage garnishment, and replace it with the installment agreement.